So how many of you would immediately reject a last unit in a new project, and or even the balance units that says, so maybe because it's a low floor unit, or perhaps you think that if it's a balance unit, the prices are already higher than those already initially launched at the first day, right? So, and you think that you are paying higher than the earlier buyers, and I cannot judge because most families actually do that. They also have this mentality. But here's the honest truth, right? So one wrong move here by purchasing the wrong property could quietly cost your family more than 200,000. And today, I'm going to show you why last units in the post-launch balance units that is in the current market today, the so-called leftovers, how one family actually turned this around, and what turned it from a last chance of opportunity, right, turn into a winning upgrade. And so today, if you have not subscribed to our channel, this is the first time that you are here, give us a subscribe button because it will help us a lot. And also turn on the notification bell because every single week we actually drive new contents like this in our videos to educate you as a homeowner or as well as an investor on how you should navigate through the property market. And then give us a like for this video and share this video with somebody that you know that potentially could do this. So today, I believe that many of you could have actually seen the hype around new launches, and most importantly is because they have bought in the early bird prices, and many of them will find that, oh, I buy in the first time and I should be a winner in this situation. So many friends was telling you, hey, just go and get a ballot so that you can secure the new launches. Don't touch the resale, don't touch the last few balance units in the project. How many of you have heard this narrative before? So, but let me tell you and share with you this family that whom I've advised. They actually own a 2-bedroom freehold property in the OCR. And what's their plan? Their plan was actually to sell it, and so that they can actually move in with their parents and also to raise the kids because the families are nearby. So they want to actually have everybody staying together. So some of you might think, hey, wow, you give up a freehold, you see, exactly. And a lot of their friends actually told them the same thing. Hey, if you move from OCR freehold, any properties that you're getting, you are actually downgrading. Wow, so you shouldn't do it. You are making a huge mistake. So here's the thing, right? A lot of times when we are hearing such comments from other people, not that your friend is not helping you, not that your friends are advising you, it's just that, don't you agree every family situation are very different? And if today we have a cookie cutter plan that, oh, today I do this, you should also do that. Maybe for other things can, but for property, I think it's a little bit difficult based on objective, based on situations, based on finances. There are so many different modules and different parts of moving parts that we need to be aware of. So I call those things labels. Okay, it's like you print a label. This label is fixed there. Okay, so this label actually cannot be used for everybody. And sometimes we will have different labels like a freehold label or maybe a leasehold label. We want to compare both. Or maybe even those who are going for the launches, the first few units, or you are the first person, or versus the last few units. And even high floor and low floor, these are what we call labels. And labels are generally quite fixed, okay, in consumers' behavior, in buyers' behavior. And today, you cannot decide based on labels. Okay, I want to share with you all the one key thing that you must follow through, right? Instead of labels, what are the things that you should be looking out for? That's why you must continue to watch this video, because at the end of this video, I will also be sharing with you how you should be learning this as I teach you what are the different steps that you should be looking out for before you actually jump into this. So a lot of people always think that, there's a lot of wrong property types that you should be going for. So one of the key thing, right, is what I call the traps in the marketplace. The first trap I usually see is crowd belief. And what is crowd belief? Basically, you the traps that actually catch you, right? They will think that, oh, my friend said that this project is good, and then I should go for it. So that's the herd mentality. And when you are following the crowd, it doesn't mean it's a personal safety, because as I mentioned, things are very different for everybody. So for example, like the recent launch that is more than 90% sold, doesn't mean that it's safe in your opinion? All right, so these are things that we have to kind of bounce off in our discussion. So even if it's very highly taken up in terms of sales volume and the demand is very high during the launch, it doesn't say the same thing 5 years later down the road when you're selling it. Okay, so this is something that you need to be very careful about. So the second trap is about the last unit and low floor stigma. And I know every single one out there, sometimes we advocate, oh, we should get a high floor unit because the view is better, maybe the air is better also. And sometimes when we are having this last unit stigma, it actually prevents us from seeing a bigger picture. So what they realize is many people will always see that leftover balance units means, wow, you're a loser, you're buying more expensive, you buy a low floor unit, cannot sell one, you know. So these are the narrative that we've been hearing. But is it really the case when we are doing certain comparison? Of course, this is not for every single project, but there are also traits that you can also learn from this video that help you to position your purchase better later on. And many of these units, even for lower floors, even if it's the last few units, as long as you fit in a criteria that I'm going to share with you and guide you through, right? The last units can be a hidden gem without you realizing. Okay, so this is the second trap that you need to prevent yourself from. So the third trap, right, is freehold comfort zone. Okay, I think everybody understands this. Wow, freehold is always better. I can hold it. I can, keep it for legacy. Yeah, the key thing is that will anyone be in a position to exchange freehold to a leasehold? It don't make sense. But sometimes when we are clinging on to the freehold situation, right, it may also trap us in getting the right property for growth. So let me ask you, how many of you have heard this before or even believing it yourself that today, if it locks you into the wrong size, wrong location, your exit also may be a problem. All right, so the bottom line is that today, if you are figuring all these things out yourself, how are you able to make any decision? Because you are going in circles, there's no other perspective that is helping you to gain that clarity or even the confidence to enter the market. So I want to kind of share with you guys a quick overview, right, of a story. Is that today, one of our clients previously, they actually wanted to really kind of determine how the property is going to be. Okay, and they have this idea of actually getting a property, switching their property out. Okay, from a freehold 2-bedroom to a 4-bedroom unit. Why? Because they want to actually house their families together. So based on this move, because everybody's situation is different, and so for them, they find that, hey, actually for me to move from a 2-bedroom in the OCR freehold unit to 4-bedroom is ideally, because of their family situation, they want to do it. So they are doing this exchange from an OCR property. So the key thing is that if I ask you to move from a freehold to a leasehold, and there must be certain trade-off, and there must be a certain compelling reason for you to actually do it, correct? Yeah, so this is why I also want to kind of give you guys a quick overview. Like today, if you are intending to swap out your property from where you are right now, you also want to do something better or maybe even equivalent, correct? Else, it's not really an upgrade. A lot of people say upgrade, but what's actually upgrade? So when they approach us, they actually do not have much clue about what is happening to their property. They do not know what is happening in the marketplace, and they're just basing on their own ideas and feeling to, oh, I think I want to buy this property. So when they reach out to us and we go through a full-fledged consultation to guide them through this entire REI method process, right? I think we spotted out quite a lot of blind spots that they missed out. That means while they are doing their own research, they went to see viewings after viewings. They realize they are wasting a lot of time. Not say wasting time, but every weekend they have to go and figure out and a lot of their weekends are burned, and they don't really have time to really sit down and study it carefully of what they want. And a lot of them is just going down and see the properties. So what is considered an upgrade? Of course, everybody have different thoughts about upgrading. So upgrading what we have kind of helped them to understand is, if today you want to swap out a freehold 2-bedroom, then one of the upgrade could be a change of location from OCR. Could there be a possibility to a RCR? All right, so that's one. And if let's say we go from a 2-bedroom type, upgrade to a 4-bedroom, then there is a compelling reason behind it. And if let's say this change, this sort of property allows you to have even better amenities, okay, or even the MRT transportations are also what you can have, then that's also considered upgrade, because for them, right, their previous property, in terms of amenities and transportations, accessibility is non-existent. Okay, I think you only have prata there. Okay, really non-existent, only prata. Not even the shopping mall, nothing. Nothing. So if we want to switch them out, then you might need to kind of give a better factor to what? To replace the freehold status as the priority in the past. You see, so that's why I always share that today, based on property, we need to see it very logically, or maybe even from a different perspective. So how many of you agree that if let's say we are able to swap this property to all these traits, it's actually worth to consider how it's a good upgrade so from OCR to RCR, 2-bedroom to 4-bedroom, and then I get all the amenities and transportation around. So this is a good upgrade. So how did we come out to this objective? That's where we go through the entire REI method consultation, define for their property journey. What's their steps? What's the blueprint that they're going forward? And we guide them step by step how to execute. And the key thing is before they even sell. Okay, so this is very important, my friends. Today, key is a lot of homeowners out there, they don't even have an idea what is happening, and then they jump into the market. So this is actually very risky. All right, you do not know what's going to happen next. So that is a red flag, if you ask me. But if today, if let's say there's an opportunity for you, based on your situation, to buy the last unit of a development, and then it's on the lower floor, below 5th floor, or below 5th floor kind, will you actually buy? All right, so this is a very real question, okay, because most people don't. You ask me to buy the last unit, cannot lah. You know why? So low, how to sell? There's always this objection, right? And I buy, other people already buy cheaper than me, earlier than me. Then for me, am I the carrot cake for people to buy because I'll be buying the most expensive? See, these are very common objections and questions that we always ask ourselves. You see, but is it true is where we need to kind of ding dong about. So one of the key things that we always run through with our clients is to ensure that you are not only looking for things from one perspective, but let us switch it out so that we are able to see it from both sides before we even make a decision. So this is where we will apply the 7 points. Okay, 7 points fit filter to help them as part of our RE method, right? And I'm going to show you one of the filter. Okay, one of the filter is let me just So one of the filter is actually PSF to resale gap. Okay, so out of the 7, the one of them is, we call it PSF to resale gap, and that's where we are able to show you how is it going to be done. So I'm going to teach you this. All right, so let me just start with this. So during that period, right, one of the key things that if today you want to kind of look for comparison, right, you need to ensure that today you are comparing similar type of properties. Okay, you want to compare similar type of properties. Why? Because today, a lot of times when we are doing comparison, we are always doing it wrongly. So one of the first key things I'm going to teach you this is, if you want to find similar comparison, what are the few things you should look at for? Okay, so the first, number one is the number of units. The number of units must be somehow close to each other. Okay, you cannot find exactly the same, but similar. You don't use a 50 units to compare to a 500 units. Okay, I think then your data will be skewed. You will not get the real picture. But you can find things like this, similar comparison. And the second level of comparison you want to do is, you want to look at the age of the property. Okay, you want to find somehow a very similar age to kind of pull out some of these numbers, transactions, okay, asking prices, valuation, to kind of get a good sense. Because the closer you are able to compare properties, right, the closer you are able to get more accuracy. All right. Then what is the third thing? Third thing, well, of course, when you are finding those property, right, you try to make sure that they are all within 500 to 800 meters radius. Okay, depending on which location, because some locations maybe even 500 meters, 800 meters don't have properties. So you may need to extend your reach. So it really depends on how far you extend. But you don't go and use east side to compare to west side. Okay, it don't make sense. Okay, in that sense. So this is also the time where during that time when we are looking at the properties, we already researched the entire Singapore to try to fit in this objective that we want. Okay, and upgrade into RCR, and also to from a 2-bedroom to a 4-bedroom, and what can we have in terms of amenities nearby to make sense of the upgrade. All right. So during that period, that's where we kind of zone in into one location where it's kind of under the radar. A lot of people kind of miss out this area. Why? Because during that time, everybody was hyped up about other new launches, you see. So if I remember correctly, the time it was the hype of Commonwealth Towers and Queen's Peak. So everybody was rushing because social media was talking about it, the newspaper is talking about it, uncle, auntie at the coffee shop also talking about it. Then you kind of like, oh, this is the project I want to go for. So nothing wrong. That's how new launches hype are supposed to be, right? So I want to share with you exactly what we did. So I pull out my data all the way back to 2018. I want to show you how did we help this client to get clarity, to get confidence of the marketplace, even though it is the last unit and it's a low floor unit. All right, let us just look at how we derive this using our 7 steps fit filter, and I'm going to give you the guidelines of how PSF to resale price gap is an indicator. All right, so let us just move forward. So this is what we did, okay, initially. So I'm going to show you the entire blueprint, right? So when we were looking at the data, right? So one of the things that we realized was that during that time, Kerrisdale, which is TOP in 2005, right, which is a leasehold property, all right, this unit, we are looking, because we're upgrading to a 4-bedroom, right? So we want to use 4 bedrooms as a comparison. So we realized that the 4-bedroom units, which is 1,485 square feet, was already transacted at 1.65 million. Going to PSF about 1,111 per square foot. Take note that this is back in what? 2018, which means this property is already 13 years. Okay, at least 13 years. So the closest comparison that we want to, that's why we mentioned you need to be near the area, you need to kind of shortlist some of all these units. The second one that we saw was actually City Lights. City Lights was also 99 years. And this was 2007. So this was a little bit younger, 2 years younger. So this was already 11 years. Okay. But this one was a 3-bedroom. Okay. Because their 4-bedroom quantum was a lot more higher. But this one was about 1.8 million just for a 3-bedroom. But the size-wise was actually very comfortable, 1,356 square feet, you know. And the per square foot comes about 1,327 per square foot. So here you can see a 13-year property versus an 11-year property. What is their price gap? Their price gap is about $200 or $100+ on average. About $200 per average on terms of gap. So then you will have a better understanding like, okay, that means this area, if let's say I compare even a younger property, the gap should not cross too far away from the $200 per square foot. Does it make sense? So of course, when we are looking at the comparison, right, then we look at City Square residences. Then you look at the pricing is 2.29 million at almost 1,500 square feet at 1,500 per square foot. Wow. So this was a jump about also $200 per square foot, right? So is this a right comparison? So this is where a lot of homeowners, sometimes when we are looking at data, you may make a mistake because you did not dive in deep enough into the research. And very surface, sometimes when you look at the numbers, you just presume that, oh, this is it. So our role is to act as a filter to help you don't make mistakes. Okay. So why is it City Square Residences is commanding 1,500 plus? So if you do not know and you are looking for a resale property there, then you may want to then you may end up buying what? Kerrisdale or even City Lights because they are cheaper, But this is not the case. Why? Because for City Lights Residences, it is a, let me just use different color, freehold property. Okay, it is a freehold property. So that could also become the deciding factor about the price point of increase and the gap of this 200 plus per square foot. But take note, City Square Residences is 2008, which means this is also a younger property. So a 1 year difference, but the gap is almost $200, could be because of the age, or it could be also because of the freehold. So during that period when we were looking out for the research, remember during this 2018, what we did was we looked through the entire research to find the compelling property that we know that in terms of your price point, in terms of your PSF to resale price gap, right, it's very narrow. So this is one of the 7 steps that we use, and that's why we are able to help them to shortlist a very compelling properties. But it was a little bit difficult to digest. Why? Last unit ma, and it's a lower floor unit. So there were a lot of objections, and there's one big objections during that period in 2018 that they are also very uncomfortable with. And I'm going to share with you what is that, because you need to follow through this video, because that could be what you are facing right now. The same situation, and you could be facing that. That is what is stopping you from moving forward. So I want you all to also learn from this case study to kind of help you make better decisions in your property, so that you can go in with more clarity and more confidence. All right. So what happened here is that when we were looking for the research, right, we found this Sturdee residences. So it was a balanced unit. So during that time, their TOP was about 2019. So we are about a year into the TOP. Okay. A year plus, if you ask me. So during that time when we were looking at the numbers, there was a last unit of a 4-bedroom that is 1,300 square feet, going at about 1.793 million. And when you look at the PSF, $1,377 per square foot. If you compare this to City Lights Residences, even though City Lights Residences is so much closer to Lavender MRT, right? You can see how much difference. We're talking about only about $50 per square foot difference. So my friends, let me ask you, if today you are able to get a brand new lease, 1 year into TOP, and versus an 11-year property that is commanding similar per square foot, which one will you go for? You see, so this is what I mean by, if today you are able to spot units in terms of per square foot to the resale is as close as possible, you will have a better safety net. All right. I'm not talking about profits. Why? Because nobody can guarantee profits, but we can guarantee what? To lower down our risk as much as possible. And during the period when we were looking at this, to us, when we are doing the research, it's still not convincing enough, because why? Lower floor ma. You know, we ourselves sometimes also have to justify whether is this a good purchase to help our clients move forward. You see, that's how we are able to stay in this business for more than 17 years, you see. Then also because it's lower floor, it's a last unit, you know, is this really something that we should recommend our clients? So that's when during that period, there was also other launches. So what is the other launches that's going on around the area? It was Uptown and Farrer. Okay, let me just, yeah, it was Uptown and Farrer. So what's interesting was that, as I mentioned, Sturdee Residences was kind of under the radar because everybody was chonging all the new launches, right? All the hype, right? Uptown at Farrer, right? Somebody during that period actually bought, so it was a new launch, actually bought at what? $1,986 per square foot. Okay, at 2.7 million. Of course, the size is bigger, okay, about 100 square feet more, but they are buying at 2.7 million. And this is a smaller development. Yes, I agree. Uptown Farrer is just by the MRT. Okay, you're surrounded by all the medical new hubs that's coming out during that period. But let me ask every one of you here, between A, Uptown Residences, being a brand new launch, meaning your TOP is only going to be 3 years down the road, and you are able to capitalize on what? The progressive payment that you are able to write on it. So these are all the perks also from new launches, right? But we're not saying that those are not part of your equation, but you need to take that into consideration that now a new launch is 2.7 million for a 4-bedroom versus Sturdee at 1.793 million, give it 1.8 million. Does it make sense or not? How much gap are we talking about? Okay, give and take, it's only 1 year different or 2 years different, but the commanding difference we're talking about close to what? 1,900 plus per square foot to 1,300 plus per square foot, right? We're talking about $600 per square foot difference. If you are going for 1,000 square feet unit, okay, 1,000 square foot unit, we're talking about what? 600,000 difference, my friend. Just for the MRT, does it make sense? And a smaller development, or I mean, facilities, all this, let's not count those, just look at the numbers. So that is also the extra confidence that we get when we are recommending this property. And of course, 1.5 years, 2 years later, we also saw that Piccadilly came in to launch at $2,000 to $2,200 per square foot. But this was already after we have guided them to purchase Sturdee residences. And why is Piccadilly Grand selling at $2,100 per square foot? Because they are following Uptown and Farrell's last transacted prices to mark their profits, to mark their next launch. So this is how the numbers play out. And if today you are not careful, you may fall into the trap of the hype. You may fall into the wrong entry pricing. And then you end up wondering, how is it that my property has not gone up versus the other locations? So this is something that I really want to kind of stress and guide you guys through. Why? Because the thing is, today, if you are just chasing based on your gut feel, your emotions, not that it's wrong, but why not you have another set of equations to guide you through so that you can be more clearer, confident about your decision making before you move forward, right? So this is what we advocate in our consults, our education. And like I mentioned just now, while they were making this decision, besides the low floor, besides the last unit situation, they are also very concerned of one thing, all right? So how many of you can remember what happened in 2018? All right, so continue to watch because I'm going to also share with you later on at the last, right? Actually, what happened to this property that they bought that is low floor, that is, last unit. And because of this market situation, what happened to their property now? All right, so stay tuned and we'll show you. All right, so what happened during 2018? So 2018 was a time where actually in terms of our price index is the highest. Okay, it went the highest during that period. Why is it highest? Because if you can see all the while, right, it was all negative. All right, and during 2018-17 period, it suddenly started to go up. And it went up to almost 3.9 and 3.4% during that period. So that period, if you can recall, and if you can think about right now, if this happened to you, prices are at an all-time high. So then the question is, when it's all-time high, how do people usually react? You see, are you looking at properties because it's high, ma? When it's high price, most people don't enter the property market because it's very scary. And what do we hope for? Prices to come down. I mean, it's always the same narrative, right? But this is not the only thing that is concerning. All right, during that time, US and China was having trade wars. And there was a huge logistical situation that our economy also went downwards over time during that period. So it was a slow growth for Singapore, and our inflation, interest rates also at that period, it went up. So we were having a high interest rate environment during that period as well. And not only that, the inflation was also creeping up. So a lot of the numbers or economy situation climate was actually against everybody's behavior. And not only that, then one slap of a situation happened was ABSD was raised. So when I look back some of all this research that we're doing, right, actually there are a lot of patterns and telltale signs that guided us to react in the market if you know how to follow the breadcrumbs. Because how many of you find that these are all actually very familiar? How many of you are familiar with, hey, these are the things that are actually quite common and to be like happening right now at the same time? And if today you are taking all these factors that I share with you, and will you move forward with a last unit and a low floor unit? Okay, chances are you may not. But for them, because after we analyze, we share them through education, through understanding, and we teach them how to look at property from our perspective, they went forward. And because there's so much research being done, right? And this family, they were also at one point, same like a lot of people are kind of blindsided because of the fear, because of all these things. Yeah, but once they actually go through the fit filter, the 7 points, right, they realize that actually it's never about whether it's a first or last unit, whether it's a high floor or low floor unit. It's about how this property fit into their criteria, fit into their plans, that they can actually move forward. And that is why a lot of times, sometimes you may have an opportunity out there, but you may miss it because it's like a last property. But that last unit or balance unit could potentially be a winning upgrade for you, just that you haven't explored that option before. That's why don't discount just the post-launch balance unit or even the resale market. There are also hidden gems that you can actually uncover if you really spend more time studying into it. So I also want to give you guys a quick kind of share with you, fast forward what happened to this property. All right, shall we? Let's take a look. So this is the property, right? So this is a 4-bedroom. All right. So even though it's a 4-bedroom, I just want to use a very simple calculation of 1,000 square foot unit to calculate. So based on this thing, you can see that since 2018, when they started purchasing, right, this is A, right? And if we look at current time, all the way until today, you can see that the price, the profit that they have made is actually, the property has actually risen almost 60%. All right, 60% is equivalent to what? Almost 600,000 in just how many years? From 2018 to 2025, and we are not even gone with 2025 yet, right? So we're talking about 7 years. All right, so this is also a part that sometimes you may say that, oh, high price, high interest rates, very unstable. Should I still enter the market? Right. So that's why the research and the numbers comes in. So don't say that, because Coach Edmund say that when the market is not good, I just anyhow buy. Cannot, please, disclaimer first, cannot anyhow enter. There's a lot of layers, there's a lot of frameworks and criteria that we look at, besides just how other people are looking at. That is why we are very confident about how we are able to guide a lot of our homeowners and ourselves also in terms of property purchase. Not guessing one. There's never guessing, right? So of course, some of you may be also seeing that, you show me this because of COVID COVID, everybody make money you see. So but I want to share with you, no doubt across Singapore, COVID situation did happen. But if let's say we say that during this period, they hold on to this property and they want to exit midterm, okay, which is 2022 thereabout, all right, which is when the seller stamp duty, after that, they can actually sell the property. You can also see that their property has also increased. Okay, this one may be a little too small to see. Has also increased 36%. So from A point to their C point, which is their first chance of exit to capitalize on their profits, right? It could also already increase almost 36%, 36 to 37% in how many years? 4 years. See, so these are all numbers that is driven. And during that period, if let's say that's why when you hold on to this property and from C point to B point, the increase is about 16%, 16.5% thereabout. So the growth after that actually came a little bit slower, even with the COVID effect. So these are all things that you need to use it as a reference point, that the narrative in the marketplace is not a cookie cutter. So you need to ask yourself, if you are able to actually grow your property over $600,000 in just 7 years, how long do we need to save and work and save this amount? Okay, so why do I want to share with you this? Why do I want to share with you this? Because at any one point, right, do you agree? Many of us, we are also very worried, very fearful about a lot of different things. We're always blindsided by different things. And especially like low floor, a balance unit, should I buy? I always want to chong the first one. But have you actually studied well of what is actually happening? I think this is very important. Okay, you must study, you cannot just anyhow jump, right? So like for example, like say, I want to just chong the new launch. Of course, we're not saying new launch cannot chong, but you also need to study, right? So let me just show you this example. So if let's say you decided because last unit you don't want to go for it, or balance unit right now, and then you say, I just want to chong the new launch. Then in this situation, you go and chong uptown at Faro, new launch you see, because MRT or it's a new craze, it's a new hype, or I just want to go. And this is how we weigh out in comparison. Okay, So why is it not working? It's not that the new launch did not grow. So if you look at this data, right, you can see that actually for Uptown, which is the red color line, so Sturdee is blue color, Uptown is actually red color. So they actually started, younger, right? It's a younger property. So they started about 2019-ish. So when they started, their per square foot is about 1,867. Okay. And if let's say we talk about the starting point until today, their growth is about how many percent? 8.7%. So that's 2019 all the way to 2025. We're talking about 6 years. Got grow lah. But it's grow how much ma? Correct. So that's why you will need to look at during the same period. Let's say we use the same period for Sturdee, right? I mean, to be fair, you say that Sturdee is earlier, but if let's say we use the same point, okay, of where Uptown at Farrer was actually launching, and then we mesh it correctly the same period. Even for Sturdee residences, it went up 47%. Okay, so why is this happening? So that's why we need to use the fit filter, all the 7 points, right, to set this criteria properly for us in today's marketplace to position our unit well. And because we've done thousands of analysis to spot the patterns, okay, so-called the patterns. So regardless of the market condition, okay, but whether the market goes up, whether the market comes down, your property must still perform. Okay, it must help you to elevate your asset, elevate its total value, because this is extremely important. And that's why when we saw the pattern of winning properties and losing properties, that's how we are able to come out some guidelines. Like for example, this one, right? If you see this between the Uptown and Sturdee, right? New launch, we always say new launch is what? More expensive. But the gap here is almost 15.32%. The gap between a so-called resale or older slightly property versus a new property. So is 15% too much? You see, is this the situation that's why Uptown and Farrer is not performing well? See, so there's a lot of situations you need to really kind of study and not just based on the surface. Because today, we are basing on different data points to guide us through, and that's how we can formulate the REI method to help you, you see. So how many of you agree that if let's say today, based on what I share with you, if let's say you have a higher chance to get a winning property, and what I share with you today is just one step. But if let's say you have all 7 steps or layers, more layers and criteria to consider, will it help you actually make a better decision or not? So here's the exciting part. This filter doesn't apply only just to new launches. It can apply to post-launch. It can also apply to what? Resale properties. Okay, so in fact, so that's why you all must subscribe. You must subscribe to the video. All right, subscribe to the video, put on the notification bell, like the video, so that the next video that I'm going to share with you, okay, you all must follow through. The next video, I'm going to share with you the so-called risky resale. Okay, a lot of us, sometimes when we are looking at a lot of narrative in the market, wow, resale cannot grow, very negative. But I'm going to share with you the so-called risky resale. The kind most buyers think that, oh, I buy already, I chum. Okay, and I'm going to share with you how you can actually turn it into a safe play for you. Okay, a safer play, and it could actually be safer than even a new launch. Okay, I'm going to share with you in the next video, so don't miss it. So you must click subscribe, like, whichever you want to do, and watch out for my next video. All right, so this is very important. So today, if let's say you have already kind of shortlisted, or maybe you're already exploring in the property market, you're kind of confused. Hey, then should I go for new launch, post-launch, or resale? Wow, so many. Which direction is the best for me? So that is where you want a safe entry, you see. And today, one key point is don't follow labels blindly, okay? And you don't want to risk that kind of regret. You can actually WhatsApp, scan the QR code later with the word entry plan, okay? Type the word entry plan, and I'll help you map out your choice, okay? I don't know what's your top choices maybe you have against one other alternative that you may have missed out. And that's where we are able to help you move forward with this property plan. And remember, the only safe way is really to make sure that it passes the 7 points. Or if it doesn't pass the 7 points, why are we even going into the property market? All right. So it's never about what you buy. It's really about how you're going to sell it next time as well. So you cannot just look at, I want to buy. You must also start to think forward, whether it's 5 years, 8 years, 10 years down the road, right? How these properties, in terms of pricing, in terms of layout, in terms of many different things, right? How are you going to sell? So I hope that you guys are learning something. At the same time, if let's say today, some of you are also kind of thinking, there are some new launches coming up. I really want to kind of queue. Maybe you have missed some of the previous few months video launches, and then you say that, oh, my ballot number is so cui. I want to try the next one. You can keep trying, or scan the QR code and get us to kind of give you a better direction of play, so that it's safer, is helping you see a bigger picture and seeing things from a different perspective before you make a decision. So we are talking about Sky and Holland, which is launching maybe about end September. We have Faber Residences in October. Pendrive, which is Margaret Drive, is about October as well. Zion Grand, which is one of the big topic in October. The Sand, which is also in October. So there are all these launches coming up. But if you are intending not to wait and you really want to deploy your funds into the marketplace by choosing the right property, the question is, do we want to wait? Or there are existing also hidden gems that you have not uncovered? All right. So this is something that I believe many of you are able to take back. And so that I'll see you in the next video. Remember to subscribe, like, and also turn on the notification bell so that you can actually be informed when we are running the next video. All right, cheers.